Right guys, I thought I'd just make another video on the trades that I took today and just giving them a breakdown and really why I took the trades. Okay, so if we hop into the replay mode, I'm just going to rewind back just so I can mark up everything that I obviously took. If we just delete all that real quick. Okay, so straight away, as you hop into the market, you want to obviously work out what the market's been doing through Asia session and London session. So as you can see right here, throughout Asia session and the start of London, we were kind of ranging. And then as you can see towards at the end of London, we started manipulating to the upside, right? So this is instantly, you could already see that we're starting to create power of three. So this line that I have marked out right here is actually an hourly order block. So I was looking for a reaction off of that to obviously go down and take sells, because our overall bias for the day is going to be sells, knowing that there's a new weekly opening gap, and there's also, if we go to the 5 minute, we can see these equal lows right here. And if you're in the Discord and you're obviously a paid member, then you'll see that equal lows are a really good drawn liquidity to target. Okay, so you've got the accumulation, you've got the manipulation. So what we're looking for is the distribution to obviously fill this new weekly opening gap and then also take those equal lows. So let's see how that plays. So if we just skip along just a little bit, you can see we've made that high, tapping into the hourly order block. It seems to have respected it and started to come back down. But if we hop to the higher time frame, you can see that we have this 5 minute fair value gap. Okay, so we want to see how that reacts off of that. Obviously I was expecting one more sweep of liquidity, seeing as the 15 minute just opened, and I was expecting us to go up a little bit more before we come back down. So if we just skip along just a little bit, you can see that we're getting a reaction of this 5 minute fair value gap. And if we go over to ES, because obviously they're correlating pairs, it's a good thing to look into for bullish and bearish SMT. If we go over there, just skip along, and you can see we've got that reaction outside the market. So now all we're doing is waiting, and then you can see we've created that 1 minute fair value gap right here, and also this 1 minute order block that it seems to have respected. So if we go 1 minute OB, you can also see what has happened here is we've created SMT on these two lows right here. So these two lows, we've created SMT. Now honestly, a lot of people won't take a trade because they're equal lows, and that's where the market's really drawn to. Okay, you've got a lot of drawn liquidity on the equal lows and equal highs. It's a good place to put your target, but I wouldn't worry about 1 minute equal lows and equal highs on the 1 minute time frame, as a lot of the time they don't really matter. You really just want to be focusing on the higher time frame equal lows. Those are really good to be looking at and a really good place to put your target. So obviously, as you can see right here, we've got these we've got this 1 minute order block that got respected. It's still in this fair value gap, so I was waiting for us to come out of this fair value gap just in case if we inverse it and go down. As you can see right here, we came out of that fair value gap, and as soon as we came out of that fair value gap, I obviously had 3 confluences to go into a buy here, because obviously we've got this 5 minute fair value gap that is getting respected, the 1 minute order block that got respected, and we're also coming out of this 1 minute FEG. So I put my stops just below the fair value gap, and then my target was on this high. Let's play that out. Obviously it hit the high. I also let a runner go. I think it was like a 1 to 3 or a 1 to 4, but yeah, I let a runner go. Out of this trade, I think it was around about here, I'm not too sure, I can't really remember, but I ended up getting out around about this trade because honestly market open was coming and I was expecting us to go down for these equal lows, and obviously to fill this new weekly opening gap. So obviously after creating this fair value gap right here, and market open was obviously at 2:30, so it was around in 10 minutes time, I waited for this fair value gap to get inversed to go obviously take it to the downside, because obviously we still had this order block and it is an hourly order block, and you can see it got respected here, so most likely it is going to go down and take these equal lows and the new weekly opening gap, as they are both drawn liquidity. So I waited until that happens. As you can see right here, I think it might have been on the next candle, let's see. Yep, it was on the next candle, and then I waited for a little retracement to come back up here, and then I entered right there with my stops. above the wick of the fair value gap that got created. And then obviously this was my 50%. I took 50% at this low, and then was holding my trade all the way to these equal lows right there, those 5-minute equal lows. So if we just play this out, you can obviously see that I ended up taking that 50%. Market open came in literally 2 candles after this. And then you can see that huge dump from market open. I took 50% here and then held the rest with my stops. Not hitting my break even anyway, so even if I didn't move my stop to this spot where I took 50% off, I probably I would have got tapped out on break even either way. Now obviously these 5-minute lows didn't get taken, and I still have a feeling that will happen. Obviously these 2 trades were on a PA, so I wanted to what's called take on paper trading for the rest of the day, knowing the fact that these equal lows and this new weekly opening gap would probably still get hit, but obviously I didn't want to take any more trades on PA. If we skip this along a little bit, you can see that we've got a 3-minute IFVG right here that we're looking to realistically inverse. I did end up taking this on paper trade, not any PA or anything, but obviously the 3-minute that you're looking to inverse. You've also got clear SMT right here, so that is indicating that the market is most likely going to go down. You've got the drawn liquidity that still hasn't been hit. So if we just skip along, you can see right here that I ended up inversing. So you could even wait for a little retracement to get a better entry and for a better RR. I did do that on my paper trading, but honestly it doesn't really matter if you're not too bothered about it. But you could enter right here, and then you can even have your stops above the wick of the FVG, or just literally where you had that explosive push to the downside, and then you could target these equal lows or the new weekly opening gap right here. And then you can see it hit that new weekly opening gap and then filled it, and then started rejecting off. Anyway, that was just a quick recap on the trades that I took today. If you obviously want to learn more and how I trade, then join the mentorship. We're mentoring people one-on-one, doing live calls, and we've got a lot of information in there to help you out. Obviously that will help a lot more, seeing as you won't be wasting any time on patterns and unnecessary stuff if you're learning to trade.